All right, welcome back, guys, to part two of this trading challenge. Let's get it. I'll hit you guys with it'll be a quick quote of the day before we get started. We'll knock out the quote of the day. And obviously, it's going to be by Mark Douglas once again. So let's go with thank you guys for joining again, actually, before we even go into the quote. Thank you guys for joining. Next, quote of the day by Mark Douglas, the disciplined trader, would be adapting yourself to the trading environment. The first step in this process of adaptation is recognizing the need to adapt. If you can't manipulate or force the markets to change in a way that suits your needs, then you will need to learn how to change yourself to suit the conditions. So that's important because as a trader, as a retail trader, most importantly, we know that I can't speak for institutional traders. Obviously, I can only speak for retail traders like myself. So as retail traders, we don't have enough um capital to move the markets. We take up, if you look it up, you can see that retail traders only take up about 5% of the movement in the market, which is not enough, obviously, to move the market into the direction that you anticipate the market moving in. So again, obviously this is important to know. It's important for us to know as retail traders that since we don't have enough capital, right? You accept that we don't have enough capital to move the markets, which means that we have to adapt to the market. Let's say, for example, we see an A plus setup, and I can give you guys a prime example because um, I've already entered trades for the week, and I'll give you guys the update on how the account is going. So next, what I'll do is I'll just share my screen because this quote correlates with exactly what happened to me so far in this trading week, and it's only Monday. So I'll go ahead and start sharing my screen. One second. Okay, so as you can see, right? Um, I called this out for everybody that's in my Discord. You know that I call this out. And this was a gold setup, a gold buy setup trade to target upside, to create a higher high on the daily time frame. So this was my setup, and we entered here, and then we got up to right here, but then price started, dying down. Obviously, it looks like sellers are overtaking the markets instead of buyers. So normally, what I normally do is since I'm a swing trader, I normally set and forget my trade. However, this quote that we just went over, it refers to us as retail traders having to adapt to the markets. Since we don't have the ability to, bend and manipulate the markets in our favor, we have to adapt to the market conditions. So if the market conditions seem like it's going in my favor and it's in a uptrend, but then for whatever reason, whoever in the market, whatever market mover is out there, does puts in more, selling pressure, and they give me an expectation, or they give me ideas, or they change the structure of the market from, instead of me looking at the structure giving me buy signals, buy signals, buy signals. And if I see that they reverse the market, now I'm seeing sell signals, sell signals, sell signals, then I'm gonna be like, okay, wait a minute, maybe this trade isn't a good trade idea. Maybe if I'm in profit right now, I should probably just take profit and move on, and forget about this entire trade, you know, because if we take a look, I'm gonna give you guys a reason why I even entered this trade, and then I'm gonna give you the reason for why I exited this trade in profit. All right, so look, let's let's go back to the daily. So if we look back at the daily time frame, this is ultimately, if you look at the ultimate structure, you can see that this is the actual low and this is the actual high. Price from here retraced to 50% or more, right? So as a retail trader, you would expect for price to drive back up, pushing price to take out this high to make a newer high. And since we anticipate that happening as a retail trader, what we'll notice here is we'll look at the most recent daily levels. And if the most recent daily levels give us a daily low and a daily high here, we're also going to drop down to to lower time frames, such as the 4 hour time frame. Now, if we drop down to the 4 hour time frame, for one, we're going to want to look at the EMA. And if our 4 hour time frame is below the EMA, then that's a sign of us still having too much of sell pressure to take this trade. And not only that, I mean, it is a confirmation, right? It goes against our bullish confirmation, which is, it's not a good sign. Not only that, if we look to the left, you can see that when let's say, this is obviously a major key level right here. This right here is a major key level. So when we're under it, we're selling. When we're above it, we're buying. But if you see here, once we closed, right, we made this close. First of all, this is the 4 hour range. So with this being the 4 hour range between from here to here, this being our 4 hour range, what happened is I was expecting, especially since we had some kind of 4 hour imbalance here, I also went down to, time frames like the 1 hour, 30 minute, 15 minute, and seen that we had a good market structure shift, right? If we have a good market structure shift that happens here, what happens is we'll anticipate buying somewhere around here. You'll call this an imbalance or fair value gap. So that's the reason why I, had a stop loss below the low and then targeted a newer high. Hopefully that makes sense. Now, um, the reason why I came out of this and took profit, is for one, because one, we're under the 4 hour EMA, which is obviously a bad sign. We rejected it as soon as we got to the 4 hour EMA, which means that there's still more sellers than buyers in this market. Two, we've already closed underneath this uh area of interest, which is already a bad sign. Three, the today's Monday, right? If today's Monday, most of the times Monday lows and Monday highs get swept throughout the week. So if we look at Friday, Saturday, or Friday, and then Sunday, this is Sunday's low. Obviously, if Monday's, low is getting swept, Sundays is usually getting swept too, for lows and highs. So if this is Sunday made a low, honestly, the chances of, the probability of Sunday low and Monday low both not getting taken out is very high. Like the probability is going to be very high for those 2 days to get swept. That's also it's also a sign that, sellers are going to want to market movers are going to want to drive price to take those out. So I anticipate that there is some money in this area. You know, market movers would definitely want price to come and take this out. then not only that is, um, let's say majority of sellers are still in the market, right? Because I want to, I've gotten to the point where now I put myself in um a different perspective, right? Instead of perception, my perception of the market, I changed the way I think. And now I'm thinking more so of perspective. It's almost like sales. I don't know if any of you guys do sales, but in sales, instead of perception, you want to sell on perspective. Um, Best way I can explain this. Now, I'm thinking to myself, I've just now laid out the foundation of how a buyer in this market or a retail buyer in this market would perceive the market. Now, I'm going to explain how a seller in this market would perceive um, the the market at this point. A seller would look at the 4 hour time frame and they would take this low and bring it to either here or maybe even here. Especially if we're under the EMA, the 50%, right? If you believe in as above, so below, if you believe in 50% retracements, at least 50% retracements before heading into the um into the direction that the market is anticipating in moving in. If you believe in higher lows, higher highs, if you've done a lot of back testing as a, I don't want to say swing trader because you can back test this stuff on higher or lower time frames. If you believe in the laws of equilibrium, the laws of um the laws of karma, um, then this might make sense. So most of the times you'll see price before heading into creating a newer low. You'll see price retrace back to at least 50% before heading back in the right direction that the market wants to go in, right? Because the market doesn't make mistakes. Just to make that clear, the market does not make sense, does not make mistakes. It's always gonna move in the direction that the market is supposed to move in. So the market is always right. So if I was a seller in this market, I would take this low, drag this Fibonacci tool to this high, and then being that we're on the 4 hour time frame, I'd look at the EMA on the 4 hour time frame, and then also what I would do is drop down to lower time frames like the 2 hour, the 1 hour, the 30-minute time frame. And then now we can see that the 30-minute time frame has shifted from bullish, making higher highs, to now making lower lows, right? So, excuse me, I'm gonna re-explain this part right here. So as you can tell, this was a so low or lower low, uh, higher low, then lower low, then break of structure, then higher low, then what do you call it? Higher high, higher low, higher high, then it broke structure, right? And then uh this would be a lower high, then a lower low. So now that we broke structure, we've also tapped into the area of interest. We're also 50% at 50% of that 4 hour um equilibrium, right? 50% of the 4 hour market structure, which means that we're most likely headed to take out Sunday's low. Unfortunately, right? I didn't want that to happen. I don't want that to happen still, but it is what it is. You have to adapt to the market. This is why this is essential for you to adapt to the market. And you know, in my Discord, my free Discord, everybody's witnessing the these ideas that I'm sharing with you guys as a 6 year trader. I'm sharing my ideas with everyone so that you guys have an understanding of stop loss, take profit, reasons for getting in the trade, reasons for getting out the trade, reasons for, I mean, I can even, I'm also sharing reasons for why I'm even staying in trades. So it doesn't get more transparent than what I'm doing right now. This challenge, I want to say it's going to be light work, but we'll see. So now that I'm out of this gold trade, I'm going to show you the trade that I'm currently in, AUDNZD. I haven't looked at it for over an hour. I took sells on it. We'll see how it looks right now. Hopefully it's going in my direction. Hopefully it's nowhere near my stop loss. I'm gonna share with you guys how it looks right now. Then we'll get right into other potential ideas for this week. And then I'm also gonna share my TradeZella journal because that's obviously important for us to review. Well, it's not bad. So price came into my area of interest, then it broke structure, or gave us a market structure shift, and then I waited for price to come back to 50%. 50%, as soon as it came to 50%, I sold, and then now we're here. So that's pretty much where we're at right now, and I anticipate since the daily time frame is bearish, right? I already told you guys that, when I marked this up and shared with you guys my ideas on this, I already told you guys this was a high for the daily time frame, this was the low. So now with that being said, price came up, took this high out, but then it still closed below. And then what happened is, it gave us a internal daily market structure shift. Not only that, if you go down to the 4 hour time frame, our 4 hour time frame has been bearish. It's been bearish since it's been up here. So since it shifted, going to bearish, higher, a lower high, lower low, lower high, lower low, lower high, lower low, and then it came back into at least 50%, a little more than 50%, came into our area of interest, shifted on lower time frames, which is why I waited for pullback. It even tapped the 4 hour EMA on the 4 hour time frame. And that also obviously gave me extra confirmation to look for selling opportunity. So that's the reason why right now I have a 1 to 6 risk to reward. And that's pretty much it. I mean, I'm gonna hold this. I anticipate on holding this. I don't see any reason why I would get out of this. This is a really good trade. It is I want to say an A trade. I'm not gonna say A plus trade, but I want to say it's an A trade. It's not an A plus trade, but it's an A trade. It gives us over 1 to 3, or honestly over 1 to 2, risk to reward, which is a really good. Um, it's really obviously something that most traders want is more than 1 to 1. Obviously, everybody wants more than 1 to 1. Everybody wants more than 1 to 2, and if you can find something that's even greater than 1 to 3, that's even better. And as you can see, this is a 1 to 6. Um, Also, I mean, I wasn't expecting this opportunity to be given to us so early on in the week, but since, price had came to our area of interest, gave me, some confirmations of sell opportunities. I took that opportunity and I risked 1 to 6, or yeah, 1 to 6. It's a 1 to 6 ratio. Risk 5%, obviously, so I think maybe $7 if all goes wrong. Right now, I mean, for the week, I'll talk a little bit more about uh P&L once we get into the TradeZella journal. But so far, that's how it looks. And right now, I was expecting NZDJPY to shift, but we didn't get that. So I'm gonna sit that out. GBP JPY, I'm still waiting for price to come back, give us a pullback. It might actually happen. I mean, who knows? We'll just have to wait. That's why I have my alerts. I still have my What is this? All right, so 4 hour time frame. Ideas on this might have changed. Yeah, I think the idea for this had like recently changed because now we're looking at the daily being bullish, and then if we're looking at the 4 hour time frame also being bullish, then this would obviously be our high that we want to raid. NZD seems bullish this week because AUD NZD is selling in the NZD direction. NZD USD is also going to be buying, which is in the NZD direction. So there's a possibility, a high probability of this getting taken out, and this was last Thursday. So 4 hour time frame, we can clearly see that on the 4 hour time frame, this is the high and this is the low. And if we get a retracement, it's most likely going to be from here to here, and which would be a reason for me to also look at a 4 hour imbalance, which is right here. And we can also see Monday. Yeah, so this is a low on Monday right here. This is a low on Monday, and it's resting right above this 4 hour imbalance, which is it's almost like a no-brainer. So that's interesting. We'll wait until price comes to that area of interest, and I will, let's see, take a look at the, if we look left to see if there's any daily area, like key areas of interest, we can see that. Here, let me delete this right here. I don't think this is really that important. It's not as important as the daily areas of interest. So, let's see. Here's a good area of interest. This is a good area of interest. This is a good. This whole section right here is important. So I'll drag this down to here. This is a good daily, daily area of interest, right? And we're gonna do, okay, perfect. Now we'll just wait for price to drag down to our area of interest and wait for, price to give us a good entry signal. Price can even come out and take out Friday's low. So just gotta pay attention, see what happens. I'm gonna move this up just because of the importance of that trade. That's why I moved it up. Um, Price, we just have to wait and see what price does. This is GBP JPY. This is GBP USD. This is Euro USD. So we're still waiting on these setups. I marked these up on my last video, so if you haven't watched last video, go ahead and watch the last video, part one for this challenge. And then if we look at NASDAQ, so NASDAQ, we can see that, hold on, Thursday. I'm gonna read, I'm gonna redo this. So price closed here. So on the daily time frame, price is bullish, and then on the daily time frame, price, yeah, so I would say I would bring price from here to here, and then I would for sure have this as an area of interest, and I would also for sure look left for daily area of interest. I can't really see anything on the daily time frame, so we can do like right here, because if this gets taken out, then this would most likely get taken out, and then we would probably target this, you know, imbalance on the 4 hour time frame so that we can push up higher. So that's my perspective on the market so far. USD CHF, I'm still waiting for price to push up here and then for us to sell. And then since we're bearish on the daily time frame and also bearish on the 4 hour time frame, and then XAUSD, so gold. Again, gold is most likely gonna take out people who are, who bought on this level. So just keep that in mind. And especially because it was Sunday's low. And then also that's pretty much my markup for the week. And this is a really, you can see that this is a strong support level right here. Because you can see every time price has gone to this price, you can see reject, reject, rejected, broke through, came back, closed above, rejected, rejected again, and now it's also rejecting. So this is a very strong price point, but I still anticipate that we're gonna sell, we're gonna do a hard sell and fall and take out this low right here since we're bearish on the daily time frame. So, um, hope you guys are keeping all this in mind. Just be careful on in the markets. At this moment, there's not much opportunities that I'm seeing on high time frames like the daily with multiple pairs. I haven't really done any I really looked at these other pairs, so we can look at these together. So USD CAD, let's see. USD CAD dragged price down. 4 hour time frame. Well, the 4 hour time frame is hmm. um yeah, I wouldn't really look at that. There's not much like opportunity there. Cat JPY. Oh no, I just bullish. Okay. I mean, this should definitely get wiped out. 4 hour time frame. I mean, I would honestly say, if we were to pull back, this would be the high. This would be the low. This would be the high, right? And I would expect if we look at the daily time frame and key areas of interest, I would say I would definitely agree that areas of interest would be like right here. Like these are the most recent areas of interest, like right here, right? Like right there. Those are really good areas of interest. And then once price, and we're also above the daily EMA. And then once price pulls back, since that's also near the 50% of the 4 hour, I'd look for a lower time frame market structure shift so that we can target this high right here on the daily time frame. So that's what I would expect. I will change this from red to gold so that we can look out for this one throughout the week. And I'm also gonna throw this here so that we know what to look out for just in case it's London session and we're a little bit sleepy. And that's pretty much that for that pair. Then AUD CAD, not a fan of that one. Yeah, because when it looks too choppy, I'm not even interested in like fighting with the markets. It should really just come easily. I was in a BTC. If you're in the Discord, you can see that I was in a BTC sell, got taken out. I think I lost $8 on the account, which is it's okay, it's fine. Um, that just tells me that there's more buyers in the market. That's all that tells me. And now what that also tells me is that we should be, looking for a buy opportunity for this week. And the buy opportunity that we should be looking for this week is should be somewhere here. If price doesn't come here, then price doesn't get there. Excuse me, we just miss out on our opportunity. But I do expect for us to, let's see. Let's see. So let me just study this real quick. And then I'm gonna delete this, but I'll put it back, or I might put it back. Close. So then since price closed here, we came down here, and then we just literally created a new high. And before we go further, we should probably pull back to test this structure so that we can validate and see if there's actual buyers that are willing to take this market up and create a newer high. And, if we can do that successfully, then we should be targeting this high to the left. Since on the daily time frame, we are in fact bullish. I mean, we would have been bearish if we had closed below this low, but we didn't. We literally wicked the candles low and pushed price up. I didn't expect, that to happen. I expected for us to, create a high, low, high, or lower high, lower low. This was a high and then low on 4 hour time frame. So since we rejected this area and then moved back into this area right here, I thought maybe, since we're 4 hour time frame is still maintained, maybe we could be maintaining structure. I did see a reason to sell in this location, and then price completely ignored that and then pushed up with a ginormous candle. So now this is where we're at right now. I'm gonna put this 50% alert signal, or not alert signal, or yeah, alert signal back onto the chart so that we know once price reaches this area, we could look at buying opportunities. And I'm gonna make this orange. So those are pretty much our trade ideas for the week. So let's get into the daily journal. So daily journal or dashboard, we can see -$8, -$23. So we're down 8, 9, 10, 11. We're down $31 for the week so far. However, if I were to show you, so we're up $3 and equities at 143 right now. So again, we started the week off at 160. We're up $3 and our equities at 143. And then if I show you 23, yeah, see, we got stopped out of that. We've got the gold trades. Yeah, so that's pretty much unfortunate, but I'm not sure why it says, let me see. Yeah, well, that's pretty much 7. Yeah, well, that's yeah. But yeah, that's pretty much it. And that's pretty much what I want to show you guys so that you guys have an idea of where we're at in this trading challenge from 160 to 1000. Yeah, let me know, guys, what you guys think about the quote. Again, it was a Mark Douglas quote. I think it was a fantastic way to view the market. I'm still going through this book. I'm like halfway done. And again, let me know what you guys think about the quotes. It was at the start of this book, I said it would be a step-by-step guide in the process of adapting yourself to the trading environment. The first step in this process of adaptation is recognizing the need to adapt. If you can't manipulate or force the markets to change in a way that suits your needs, then you will need to learn how to change yourself to suit the conditions. So, yeah, let me know what you guys think about that. Drop your ideas in the comments. Um, Also, let me know if there's anything specific you guys want from me for this challenge. Um, Link's gonna be in the description to join the Discord. And then also I'll keep you guys posted on how this challenge plays out. And like, comment, subscribe. What's the average hold time is 6 hours still. Yeah, so I'll keep you guys updated. Um, and yeah, like, comment, subscribe. Thanks for watching, guys. Peace.